areas which are in news also. Otherwise, they are part of the money market chapter, and I will be discussing the conceptual part, right? So first of all, venture capital, right? So there are three different terms. One is private equity, second is venture capital, and third is angel investor. In fact, there is one more term, that is anchor investors. So what is the meaning of each one of them? What is the difference between them? How do they differ? Let us see this. So basically, private equity. What is private equity? So equity we have already discussed. This is related to the equity shares. So this private equity is basically the investment into the equity shares of a company, right? So this is normally in the well-established companies. For example, Flipkart is a well-established company. So a group of wealthy investors, they buy the equity shares of the Flipkart, not from the stock market, but directly from the Flipkart. That is, this is a new issue, but this issue is not the public issue. This is a private issue. This is a private placement, right? So a small group of people, it can be one person or more than one person, they buy the shares of well-established company. The key point to notice in this case is that this is a case of a well-established company. So private investment is being made in a well-established company. This is the private equity. Another term is venture capital. What is venture capital? Venture capital, so this is something related to venture. It's a new venture, new business, which is risky in nature, and it needs early funding. Early funding means during the startup time. So there are venture capital funds. Venture capital funds are basically those funds where small investors, they have invested their money, and the person who is managing this venture capital fund, this person invests in the new company or new startup, right? And this is an equity investment. And not only the equity investment, most of the time these venture capital funds, they will also be providing the managerial and the technical support so that the new startup can grow very fastly, right? So this is about the venture capital, right? So I am telling you the major differences between each of them. There are other details of each of these funds which we will see in the study material, right? So what is the primary difference between the private equity and the venture capital? The primary difference is that this is for the well-established company and this is for the new ventures, right? So the difference is very, very small. Both are private investment and both are investment into the equity capital. The next type of investment is angel investor. So how angel investors are different from the venture capital? So angel investors, they are also equity investment only, right? And they are also into the startup, the new startup. But the prime difference from the venture investor is that in case of angel investors, the investors invest their own money, So for example, Ratan Tata, he has he is a high net worth individual. So Ratan Tata will invest 100 crore rupees from his own wealth into a new startup, right? So this is called angel investor. So the primary difference between the venture capitalists and the angel investors is that venture capitalists, they are collecting the funds from other investors. They are not investing their own money, they are investing the money of someone else. And the angel investors, they are investing their own money. So this is called angel investors, right? The next concept is anchor investors. So what is anchor investor? So in the first class, I told you about the public issue. So what is public issue? Public issue means the company is going to sell its shares into the primary capital market, right? It is going to issue its shares to the general public. It's a new issue, right? So this public issue can be in the form of IPO, initial public offering, with like when company issues its shares to the public for the first time in its lifetime. For the first time in its lifetime, then this is IPO. After IPO, all the public issues, those are classified into the FPO, follow on public offer, right? So this concept I discussed in the first class of the money market. If you have any doubt, you can go back to that class and you can see that class, right? So in case of public issue, just before the public issue, there are some big investors, institutional investors, for example, insurance companies, pension funds. They are given an opportunity to invest into these public issues before it is opened for the general public, right? So all this is done as per the SEBI regulations. So these anchor investors are those people who invest into the public issue, who are investors into the public issue before it is opened for general public, right? So the private equity, the venture capitalist and the angel investor, all three are private investment. They are the private equity. And the fourth one is in case of public issue. So anchor investor is completely different from these three set of investors, right? So this is the broad, these are the broad differences between these four terms, right? Now we will see more details about each one of them, which I have given in my study material, right? So this is about the venture capital. So let us see. So venture capital is a financing that investors provide to startup companies and small businesses that are believed to have long-term growth potential, right? So they are providing the finance to the startup companies and the small businesses which are having some long-term growth potential, right? Venture capital generally comes from well of investors, or it can come from investment banks, or it can come from other financial institutions. It does not always take just a monetary form. It can be provided in the form of technical or managerial expertise, right? So not always just the monetary investment, but also other kind of support can be given to the new startup, right? Though it can be very risky for the investors who put up the funds, the potential for above average returns is an attractive payoff. तो ये रिस्की भी है, लेकिन साथ साथ में जो इसका इनकम आती है, जो इसकी रिटर्न आती है, that is above average. So this is something which attracts the big investors for investing in these shares, in these companies, है ना? Now, the investors usually get equity in the company. Equity means equity shares, and thus a say in the company decisions. So, equity shareholders also get the right to take part in the decision making of the company, right? So, this point I already discussed in the first class, that the equity shareholders also get the right to have participation in the decision making of the company. One important difference between the venture capital and other private equity deal is that venture capital tends to focus on emerging companies which are seeking substantial fund for the first time, while private equity tend to fund larger, more established companies that are seeking an equity infusion or a chance for companies founders to transfer some of their ownership, है ना? तो वेंचर कैपिटल नई कंपनीज के लिए है और प्राइवेट इक्विटी आपकी वेल एस्टेब्लिश्ड ओल्ड कंपनीज के लिए होता है, ठीक है? सो दिस वाज अबाउट द वेंचर कैपिटल. नाउ देयर इज सम पॉलिसी which was launched about the venture capital finance policy framework. So the state government and the cities, they can also open their infrastructure investment for getting the venture capital, right? And the principle on which it is based is that the people who are benefiting from the public investment in the infrastructure should pay for it, right? So the local resident who are benefiting from the investment in the infrastructure, they should also get they should also contribute, है ना? तो इसमें क्या होता है कि जो स्मॉल इन्वेस्टर्स हैं वो इन्वेस्ट करते हैं एक फंड के अंदर, जो वेंचर कैपिटल फंड होता है, और वेंचर कैपिटल फंड फर्दर इन्वेस्ट्स इनटू द पब्लिक इंफ्रास्ट्रक्चर इन्वेस्टमेंट, है ना? जैसे कि एयरपोर्ट हो गया, रोड हो गया, इंडस्ट्रीज हो गया, है ना? और when there is increase in the value of land of that investment, for example, in case of airport, some land has been acquired by the company, by some government company or government authority, and the people have invested in that project, and it is very natural that if airport is being built in some area, the prices of the land will naturally increase. So the value of the investment in the airport will automatically increase. So there can be increment in the value of land, which can be shared with the investors, with the people who have invested in these projects, right? तो मेन बात ये है कि वेंचर कैपिटल को हम लोग इंफ्रास्ट्रक्चर इन्वेस्टमेंट में अट्रैक्ट करना चाहते हैं, और इट विल हेल्प बोथ वे. इट विल create a new source of funding for the infrastructure investment, as well as it will also generate the new source of investment, a new source of making investment for the small investors. So this is about the venture capital. Next is angel investor. So they are also investing into the small startups and entrepreneurs, and the major difference is that essentially angel investors are opposite of venture capitalists. Angel investors typically use their own money unlike venture capitalists who take care of pooled money from many other investors and place them in a strategically managed fund. तो वेंचर कैपिटल का जो पर्पस होता है वो प्रॉफिट मेकिंग होता है कि भाई मुझे प्रॉफिट मिल जाए बस. लेकिन एंजल इन्वेस्टर का जो पर्पस है, इट इज नॉट ओनली टू जनरेट द प्रॉफिट बट ऑल्सो टू सपोर्ट द न्यू आइडियाज, है ना. सो इट इज नॉट ऑलवेज दैट द न्यू प्रोजेक्ट विल बी सक्सेसफुल, बट angel investor might have some emotional connect with the idea. That's why this angel investor is investing into that company, right? Next concept is angel tax. We will discuss about angel tax, and before that let us discuss about the anchor investors. So anchor investors are the institutional investors who are offered shares in the initial public offering a day before the offer opens, है ना. They are supposed to anchor the issue by agreeing to subscribe to the shares at a fixed price so that other investors may know that there is a demand for the shares offered, है ना. तो what anchor investors do, they basically create the demand for the new shares. They agree that I will subscribe this one, like this much number of shares at this price, so that when this issue opens up for the public already knows that big investors have already invested into this issue, so this issue is completely safe, right? So it will attract more money from the small investors also. Each investor has to put a minimum of 10 crore rupees in the issue, and this SEBI has introduced this in the 2009, and like this is applicable in case of IPO only and not in case of FPO. यानी कि जब फर्स्ट टाइम कंपनी अपने इशू शेयर कर दी है लाइफ में, when company is issuing its shares first time in the life, then only we are talking about this concept, not in case of FPO. So this is about the anchor investors, right? Now we will discuss about the angel tax. This angel tax is important because this has been a lot of time in news. So what is this? We will discuss about it. And what is alternative investment fund? Anything which is alternative to the traditional form of investment, which is alternative to the traditional form of investment, that is alternative investment fund. So traditional form of investment means investment into the stock, investment into the bonds, investment into the bank FD, or investment into the real estate. So that is a traditional form. So if investment is not being made into any traditional investment, that is alternative traditional investment. But how do you identify it, that which investment fund is alternative investment fund? How do you identify? So for identifying, such fund has to be registered or defined in the regulation of the SEBI, which were given in 2012. So SEBI has given some regulation. Based upon this regulation, such fund can be identified. Please mute yourself. I can hear the noise of someone. So it includes venture capital fund. It can include hedge fund. Hedge fund means those fund who provide the facility to hedge the risk of foreign exchange rate fluctuation, right? So there are a lot of businesses who are dealing in the foreign currency because of foreign investment, or maybe they are doing business from the foreign countries. So in all these cases, there is always a risk of change in the foreign exchange value, and because of that change in the foreign exchange value, there is always the chances of having some losses. So these hedge fund are basically those fund who decrease the losses, and similarly the risk can also rise when the investment is made into the equity stock market. So those kind of risks are also hedged. Then private equity investment, debt fund, infrastructure fund, it excludes. So what is not alternative investment fund? The mutual fund, collective investment scheme. Collective investment scheme means where The people are investing in a single scheme on a large scale. Family trust, employee stock option scheme. So employee stock option scheme means where the companies are providing the option to their own employees to buy its own shares. So for example, Infosys says that those employees who have been working for a long time in the Infosys, they will be given the shares if they continue working for the next 10 years. So Infosys will give them option that you buy these shares, and if you continue working in the Infosys company for next 10 years, then you can convert your option into the shares, right? So that is a kind of extra compensation and extra incentive which is given to the employees of a company. So this is the employee stock option scheme. Employee welfare trust, gratuity trust, holding companies within the meaning of section 4 of the Companies Act 1956, right? So you do not need to remember all of these technical details, because that level of question should not be asked. Now there are 3 categories of the AIF. You should know about this. So first category of the AIF is that they have a positive spillover on the economy and may get concessions from the regulator and pass through taxation, right? Pass through taxation. So what is the meaning of pass through taxation? You should understand this. So suppose this is a fund and it is earning a income. Suppose the income is 100 lakh rupees. On this income, if suppose this fund is a company, it is registered itself as a company, there will be tax of 30%. So it is supposed to pay 30 lakh of income tax on the profit, right? However, this fund is distributing, the purpose of this fund is basically to distribute this 100 lakh rupees to the investors, right? So one way can be that government will take the tax from fund itself. The government will charge 30% on 100 lakh rupees over here only. So this means there is no pass through, no pass through taxation, right? So when the tax on the income is being given by the fund only, this means this is not tax, this is not pass through taxation. And if the government says that okay, we will not charge 30% tax from you here, you can distribute your 100 lakh rupees to your investor. Suppose 2 lakh rupees to one investor, 3 lakh rupees to one investor, 1 lakh rupees, 10 lakh rupees, 15 lakh rupees, and so on, right? So you can distribute your income to the investor, because ultimately the income belongs to the investor. मालिक तो इन्वेस्टर ही है ना, उनकी इनकम है तो उनको बांट दो, और हम इन्वेस्टर्स पर टैक्स लेंगे. वी विल कलेक्ट द इनकम टैक्स फ्रॉम दिस इन्वेस्टर, राइट? सो इन दिस केस व्हाट इज द बेनिफिट? In this case the investors will be benefited. Why? Because for the investors the income up to 2.5 lakh rupees is tax free, है ना? इनकम टैक्स में होता है ना, इनकम टैक्स में we have a slab system. So because of the slab system, certain level of income is tax free, that is 2.5 lakh rupees. So those people whose income is very very less, for 2 lakh rupees, 1 lakh rupees, they are not supposed to pay any tax. And those people whose income is high, they are also supposed to pay 20% or 10% depending upon which slab they are falling in, right? So the tax burden on the investor is comparatively low as compared to the fund. In case of fund, there is a flat rate of 30%, but in case of investor, it can range between 0% to 30% depending upon the other income of the investor, depending upon the financial status of the investor, right? So this pass through, this distribution of the income without charging tax on the fund and the investor paying the tax is basically called pass through taxation, right? So in case of pass through taxation, the fund will not pay the tax, but the investor will pay the tax, right? In case of no pass through, the fund will pay the tax and investors will not pay the tax. Overall, pass through is beneficial to the investor, beneficial for the investors, right? So pass through is basically kind of incentive which the government can give to any kind of fund, right? So this is about the pass through taxation thing. So take few seconds and note it down. जो भी मैंने एग्जाम्पल दिया, प्लीज नोट डाउन इन योर नोट्स सो दैट यू कैन रिवाइज लेटर ऑन. So please write down at least this slide, pass through and not pass through. Okay, now let us go back to the study material, right? So category 1, they have a positive spillover and there is a facility of pass through taxation. That means investor is taxed, not the fund, right? Example is venture fund, social venture fund, infrastructure fund. So these are the funds which are promoting, this venture fund is promoting startup, social venture fund is promoting the social cause, and infrastructure fund is promoting the infrastructure sector. Category 2, they do not get any tax concession. They cannot raise the debt for investment purposes, but can do so to meet their day-to-day operation requirement, and they get the benefit of pass-through taxation. They include private equity fund, they include real estate fund, they include debt fund. Category 3, they are traded to make short-term returns, and there is no pass-through taxation. So here you can see that fund is taxed, investor is tax-free, tax-exempt. So hedge funds are the example of the category 3. So these are the 3 categories of the alternative investment fund. Then pass-through tax I have already discussed with you. Now next is the concept of participatory notes. So who will tell me about the participatory notes? So first of all, what is the need of mutual fund? What is the background? Why this mutual fund came into existence? So basically, we have different sorts of like different places where we can invest. We have share market, we have bond market, we have gold, we have different kind of index, etc. है ना? So we can invest here, but investment here that requires some kind of professional expertise, है ना? If you are not professional expert, you can lose your money. You can lose your money. So suppose we take the example of a salaried person. Salaried person joins his office at 10 a.m. in the morning and leaves his office at 6 p.m. in the evening. In between the time he is busy in his work, office work, and this stock market, bond market is working only in this time. So the person is not aware about what is happening in the stock market because the person is busy in the office work, and there are chances that the prices of his investment, they can fluctuate very in a very big way. So something happened in Syria, global oil market fluctuated and Indian stock market also fluctuated, and in minutes lakhs of investment of the salaried person washed away. So there is a lot of risk. The salaried person does not have any professional expertise. He don't have the time, right? So to take care of such issues, these mutual funds were introduced. So how do mutual fund work? A small investor, they invest into a mutual fund. They invest into a mutual fund, and this mutual fund, it hires the professionals. It has the professional fund managers who have expertise in the share market, who have time, who are paid, right? And it invests into different areas like equity, bond, index, gold, real estate. So different investment avenues are used, and the investment is made in such avenues, right? And based upon such investment, whatever return they earn, out of that return, they reduce the administrative expenses, and rest of the money they give back to the investors, right? So these are the salaried person. They are the those people who don't have the time, those people who have the money but don't know much about the market, right? So these small investors, they get an opportunity to participate into the different investment avenues with the professional expertise. So these are the mutual fund, right? These are the mutual fund. Now these mutual fund, they can invest into two primary instruments. One is the equity and another is the debt. So equity, that means they are buying the equity shares, and debt means they are buying the bonds or they are buying the debentures, right? And both of them have their own advantages and disadvantages. For example, the investment into the equity shares, it is risky in nature, but it can provide huge returns. The investment into the debt, it is less risky, but returns are also limited, right? So both have their own set of benefit and disadvantages. So primarily we can have two categories, and inside this category there can be many other subcategories of the mutual fund. There can be many other subcategories of the mutual fund, right? So this is about the mutual fund, and there is one more term in the mutual fund, that is NAV or net asset value, right? So what is net asset value and what is the use of net asset value? So basically, if Mr. A is one of the investor in the mutual fund, he invested rupees 100 in the mutual fund, right? He invested rupees 100 in the mutual fund. Now mutual fund received this money and mutual fund further invested, and today the value of this 100 rupees investment is rupees 110 rupees. The value of this investment is 110 rupees. So 110 rupees out of this mutual fund reduce its own expenses. Suppose 2 rupees and 108 rupees is the net asset value of this investment amount, right? So basically this net asset value is basically the kind of market price. It is a kind of market price of the mutual fund unit, है ना? So if you buy the mutual fund at any point of time in your life, in your account the company will reflect net asset value. So net asset value is basically, if you want to sell it right now, then this will be the value you can realize immediately, right? So this is the value you can realize immediately, and there are some formula to calculate this net asset value. That is not important for us. Now there is a concept of exchange traded fund which is related to this mutual fund only, right? So we will discuss about each one of them in the study material also, but let us see here about the exchange traded fund. So exchange traded fund is basically one of the mutual fund only, but they are traded on the stock exchange. They are traded on the stock exchange. That means if the trading is happening on the stock exchange, that means their price can fluctuate multiple times in a single day. Unlike the normal mutual fund, in case of normal mutual fund, we calculate the NAV only once in a day, right? So the primary difference between the normal mutual fund and the exchange traded fund is that they are traded on the exchange and their price can fluctuate multiple times in a single day, right? So this is the exchange traded fund. This is the exchange traded fund. Now there is a term CPSE ETF. CPSE ETF, CPSE means Central Public Sector Enterprise, means those enterprises which are owned majorly by the central government. For example, we have NTPC, we have Indian Oil Corporation, we have ONGC, etc. Right? So this CPSE ETF, suppose this is a CPSE ETF, this is the fund, mutual fund. The retail investors, they are investing into this fund. This fund will invest further only in the shares of selected CPSEs, right? So it will invest only and only in the shares of selected central public sector enterprises, right? So who are the selected CPSE? They can change from time to time. They can change from time to time. And one of the major advantage of this CPSE ETF is that they also provide one of the source of disinvestment, right? So basically the government of India is selling its shares to the CPSE fund, and CPSE fund is basically buying the government of India shares in different CPSE CPSEs, right? So गवर्नमेंट ऑफ इंडिया सेलिंग इट्स शेयर्स मींस डिसइन्वेस्टमेंट. तो गवर्नमेंट ऑफ इंडिया का जो डिसइन्वेस्टमेंट है, the CPSE fund are basically investing there. So they are providing the opportunity for the small investors to invest into the central PSUs, and the government can sell its shares to this central public sector undertaking ETF. Thereby it can raise the disinvestment proceed from this issue, right? This is about the CPSE ETF. Another term is Bharat 22. So Bharat 22 is basically set of 22 blue chip stocks. It means that the investors will invest into this Bharat 22, and this Bharat 22 will invest into the 22 blue chip stocks. What is the meaning of blue chip? Blue chip means who have been hello
Yes, sir.
Okay, so blue chip stocks means those stocks which are very sound, financially sound and very strong. So those companies who have been there for a long period of time, who have very good performance, for example Tata's, so they are classified as the blue chip stocks, right? So they are basically investing into the blue chip stock. These blue chip stock can be both from the PSU or they can be from the private sector also, right? They can be both from the PSU as well as the private sector, but primarily from the PSUs. From the private sector, very very less. This is about the Bharat 22. There is one more fund which has been introduced very recently, that is Bharat Bond ETF. So in this case basically the fund will invest into the bonds of corporates, right? Bonds of corporate. So basically the Bharat 22, it invests into the equity stocks, and this Bharat bond, it will invest into the debt funds, right? So Bharat bond ETF is basically the counterpart of Bharat 22, and the only difference is that it is dealing in the equity and it is investing into the debt. So it is a equity ETF and this is a debt ETF, right? So these are the basic terms. Now we will see in detail on the study material, and you will get more clarity about these terms from this material. And after that, if you have any doubt, you can ask me. So just read this mutual fund. So mutual fund is an investment vehicle that is made up of a pool of funds that collects money from many investors to invest in securities such as stock, bond, short-term debt to maximize investors' profit. Say they do not eliminate the profit, है ना? Sorry, they do not eliminate the risk. वो रिस्क एलिमिनेट नहीं कर सकते, है ना? क्योंकि जो रिस्क इन्वेस्टमेंट जहाँ पे भी उन्होंने इन्वेस्टमेंट किया है उसका तो रिस्क रहना ही रहना है, वो तो रिस्क रहेगा ही रहेगा. Only thing they can do is basically that they can minimize the risk by investing professionally into the different securities. They can just minimize the risk, and they charge the minimum fees. And mutual funds are an ideal investment vehicle for the regular investor who do not know much about the investing. जिसको ज़्यादा इन्वेस्टमेंट के बारे में जानकारी नहीं है, it is good for them. Sorry. Investors can choose a mutual fund scheme based on their financial goal and they are under SEBI regulations. Then there is a term net asset value. So it varies on a daily basis and it is a cumulative market value. So basically this is the market value of the assets of the fund. And then there is this formula. There can be different types of mutual fund. First, equity mutual fund who are investing into the stocks, that is in the shares, and debt funds who are investing into the bonds and the government securities. Then we have debt schemes. So these are different schemes. If you have time you can go through, otherwise not important, right? Not important for the examination unless and until something is in news. So these are self-explanatory, you can go through them. If you have any doubt you can ask me. Total expense ratio is basically simply the total fund cost divided by total fund asset, right? तो टोटल को फंड जो होता है, म्यूचुअल फंड जो होता है, उसको मैनेज करने में जितनी कॉस्ट आती है वो आपकी स्टाफ कॉस्ट है, आपकी बाकी बहुत सारे एक्सपेंसेस होते हैं, डिवाइडेड बाय द टोटल फंड वैल्यू, जो आपका अमाउंट टोटल उन्होंने इन्वेस्ट किया है उसकी वैल्यू कितनी है. तो दैट इज टोटल एक्सपेंस रेशियो एंड दिस विल एक्चुअली हेल्प इन why do we calculate total expense ratio? So that we can know whether the expenses which are there are reasonable or not. तो जो खर्चे हो रहे हैं वो reasonable हैं या नहीं है, सिर्फ उसके लिए हम लोग इसको कैलकुलेट करते हैं. ठीक है, not that much important for your examination. Yeah, this is important. Exchange traded fund. So take 2 minutes and read this slide yourself. Okay, so in this slide, one or two important aspect I would like to tell. They are listed. Listed means they are registered in the stock exchange and they can be traded. So they can be traded in the secondary market, है ना? तो कोई भी इसको बाय कर सकता है, कोई भी सेल कर सकता है इसको. ये पैसिव फंड है. पैसिव मीन्स द फंड मैनेजर विल नॉट बी सिलेक्टिंग कि आपको कहां पे इन्वेस्ट करना है. मतलब ऑलरेडी द shares have been identified. For example, we take the case of CPSC ETF. In case of CPSC ETF, the selected companies have already been identified by the fund. Initially, starting में ही वो identify हो गई थी. Now, the fund manager will just put the money in that stock. So they are not actively managing the stock. They are just putting the money into that stock as per the predefined formula. So they are copying an index. Index मतलब suppose there are 10 stocks, so they will decide that how much money will go in each one of the stock. So some stock will get 7% value, some stock will get 10% fund, some stock will get 20% fund. So different stock or different shares will be given different percentage of the investment from the fund. Again, there is a net asset value, which I already told. Just like in the mutual fund, they also have the net asset value. Now, there are two types of ETF. Gold ETF, where the participant will deposit the gold, है ना, तो वो gold deposit करेंगे, है ना. Another is index ETF created by institutional investors who swap shares in the index basket for you. So basically यहाँ पर investment in the shares होता है. Swapping shares मतलब they will buy the shares exactly in the same proportion in which a particular index has invested. For example, there is a index of Bombay Stock Exchange, that is BSE index, है ना. So in that BSE index there are top 30 shares, right? So this index ETF will be investing in those top 30 shares, right? Then we have CPSE ETF. So it was launched in 2014 and it is managed by Reliance Nippon Asset Management Fund. So the fund manager is this, है ना. तो fund manager जो है वो कौन है? Reliance Nippon Asset Management, जिसका काम है प्रोफेशनल सपोर्ट प्रोवाइड करना, है ना. द फर्स्ट CPSE ETF was, it consisted of 10 PSUs. You do not need to remember the name of these 10 PSUs. And later on, the government replaced 3 existing companies with the new 3 companies. Again, you do not need to remember the name of which company go on, which company come in, है ना. So now there are total 11 companies in the CPSE ETF. The government gave 5% discount at the launch of CPSE ETF to retail investor. So basically, जब CPSE ETF में, like when CPSE ETF invested the money in the government shares, the government shares were sold to the CPSE ETF at the 5% discount, है ना. So the government wanted that more and more retail investors should invest into the government securities, into the government shares, है ना. So the amount which is being disinvested by the government from the PSEs, more and more retail investors should come and invest into that to attract them, to encourage their participation. The government gave 5% discount for the retail investors, है ना. Then we have Bharat 22, है ना. So it consists of 22 stocks of CPSEs, public sector banks, and strategic holding of SUTI. What is SUTI? Specific undertaking of the UTI, है ना. तो this unit trust of India, this was one of the first company which initiated the idea of mutual fund in the country, right? But this company went into crisis, and now this special undertaking of unit trust of India is representing this UTI, and this UTI has invested their money into some good companies, private companies basically, है ना. तो प्राइवेट कंपनी में जैसे ITC हो गया थ्रू सूती एंड एक्सिस बैंक थ्रू सूती. So you will find only 2 private companies in the Bharat 22, and those also through the UTI, which is a government enterprise. So practically देखा जाए तो all of these stock are the government stock only, public sector stock only, है ना. But one SUTI is also having share in the 2 private companies, ITC and the Axis Bank. That is why the 2 private companies are also receiving the investment from Bharat 22. So in the examination, if they ask that Bharat 22 invests only into the public sector companies, so your answer will be yes, because you can see it consists of CPSE, that is a central public sector enterprises, PSBs, public sector banks, and strategic holding of the SUTI, which is a government company again, है ना. So in this case, discount of 3% was offered, है ना. So in case of CPSE ETF, 5% discount. In case of Bharat 22, 3% discount, है ना. So this is a mechanism where the government can divest a small portion of its stake in the big basket, है ना. So for example, many a time the central government has been selling the shares in these companies in the NTPC. So I have actually already worked for more than 5 years in this company NTPC. So I know about this, and other companies also. In all these companies, the government has been selling its shares, maybe 2%, 5%, 10%. So a small portion of its shares is being sold. So it will keep both investors and employees happy, है ना? Also by mixing the matching the value. So now ICICI Prudential will be the fund manager, and Asia Index Private Limited will be the index provider. Index provider means it will decide that which index should be followed, in what proportion should we invest in all these companies, है ना? And ICICI Prudential AMC is the asset management company, which is basically doing the execution work. Then we have Bharat Bond ETF, which was launched in the end of 2019. So this is a debt ETF, and it will hold the bonds issued by PSCs owned by the government of India, है ना? The bond which have been issued by the government of India, PSCs, है ना? So only and only corporate which are owned by the government of India. So this is the first corporate bond ETF, and is the first fixed income ETF. Fixed income, why? Because it is investing into the debt fund, and debt fund are the fixed income provider. It is a pure debt fund. Its equity counterpart is Bharat 22 fund. And where does it invest? It invests into the AAA rated bond. So this is the credit rating of the bond. That means this establishes the credibility of the bond. So AAA means they are highly credible. The companies like REC, PFC, NHAI, they have a good history of repayment to their investors. So they are much more safe. What is the minimum and maximum amount of investment? The minimum amount of investment is 1000 rupees bond, and there is no maximum limit. But for the retail investor, there is an upper limit of 2 lakh rupees. And why 2 lakh rupees limit? Because for the retail investors, some kind of discount is given. So we will count retail investor only and only when there is an upper limit of 2 lakh rupees. In this case, the index will be constructed by the NSE. And what is the advantage? So advantage is there is an assured return. So there will be some promised return. There will be some beneficial tax treatment. So if the fund is held for more than 3 years, the tax on the interest will be exempt. It will be tax free. And there is liquidity because they can be sold anytime because they are listed in the stock market, right? So assured return, beneficial tax treatment, and liquidity, all of them are the advantages. Now what are the objectives? Why they have been introduced? Because the government want to deepen the Indian debt market. I already told you yesterday that we want to raise more and more fund for the long term, but our source of fund, which include bank, which include other sources of fund, those sources of fund are basically not providing fund for the long time. So the government want to improve the bond market. So this Bharat Bond ETF will go a long way in improving the situation of the India's debt market, as well as it will help PSU companies to raise the funding for their operations. Read on the angel investment. This is levied on the angel investment. And why this is levied? So just listen to this example carefully. Suppose this is a startup company, and this company has the shares of rupees 100 each. Which will be issued to anyone who want to invest, and the money will be invested into the startup company, right? This is the angel investor. For example, Mr. X, Now the value of this equity share is 100 rupees. Startup company says that we are in a very futuristic business. Suppose, for example, a startup company says that we have innovated the COVID-19 vaccine and our future market value is going to be wonderful. The value of this share is going to be 1 lakh rupees per share, right? And hello, and this Mr. X, it invests in the startup company at 1 lakh rupees per equity share. So angel investor pays 1 lakh rupees per equity share to the startup company, है ना? Now in this transaction there are some issues. What are the issues? This 1 lakh rupees per share has been claimed by the startup company. स्टार्टअप कंपनी ने क्लेम किया कि मेरे शेयर की वैल्यू 1 लाख रुपए है, लेकिन क्या ये 1 लाख रुपए हो गया उसके कहने से? डज इट does 1 lakh rupees worth of is it really the 1 lakh rupees worth share? It is not always possible that this estimate 1 lakh rupees is correct. So there is always a fair market value. Fair market valuation is done by professional agencies based upon various factors, that what is the business of the company, what is the competition. So for example, this company says that we have innovated the COVID-19 vaccine, so our sale is going to be very, very big, right? But this fair market valuation says that although you have innovated a good vaccine, but there will be government regulations upon your business, because you cannot sell the vaccine at a very huge cost. This is an essential item, so government will put some restriction. And not only this, but also there will be other competitors who will be developing the vaccine in the near future. So your business will not have so much of value in the future. So please, like, the fair market value of your business is just 20,000 rupees per equity share, है ना? आपके जो इक्विटी शेयर की वैल्यू है, that is not 1 lakh rupees, rather just 20,000 rupees. But this angel investor has paid 1 lakh rupees. So the government says that this angel, there can be some malicious intention, there can be some intentional transaction whereby the angel investor already knew that the value of this share is only 20,000. The value of this share is only 20,000, but he invested because he had some black money. So angel investor invested 1 lakh rupees minus 20,000 per share, that is 80,000 per share of the black money. So this 80,000 is the black money or unaccounted money. So we will levy the tax on this 80,000 rupees money. Tax on 80,000 rupees, and this tax will be at the rate of 30%, right? So the logic is that these angel investors, they are converting their black money into white money by buying the shares of any startup company at a very high value. इस किसी भी स्टार्टअप कंपनी के शेयर को वो बहुत हाई वैल्यू पर बाय कर लेते हैं और अपने जो ब्लैक मनी होता है उसको व्हाइट मनी में कन्वर्ट कर लेते हैं, बिकॉज वंस दे हैव परचेज द शेयर्स ऑफ स्टार्टअप कंपनी, so they can always say that this is our cost, and in future when they will be selling their shares, they can always adjust this 1 lakh rupees as the cost. So this is called angel tax. So any doubt to anyone as of now? अभी तक किसी को कोई doubt है क्या? Ultimately, what is angel tax? Angel tax is basically the tax on the price paid by angel investor above फेयर मार्केट वैल्यू, है ना. फेयर मार्केट वैल्यू के अबव जो पेमेंट एंजल इन्वेस्टर ने की है उस पर जो टैक्स होता है उसको एंजल टैक्स बोलते हैं. बट हियर देयर इज ए कंट्रोवर्सी. द कंट्रोवर्सी इज दैट हाउ दिस फेयर मार्केट वैल्यू विल बी कैलकुलेटेड. हु विल कैलकुलेट दिस फेयर मार्केट वैल्यू? व्हाट विल बी द क्राइटेरिया ऑफ दिस फेयर मार्केट वैल्यू? There are many cases, genuine cases, where really the business future is very, very good. And that is why the angel investor have invested a big amount. So the case is very genuine. But the tax department is creating unnecessary suspicion. And tax department is sending the notices to the startup. So startup started facing a lot of problem from the government, from the income tax department. They started facing the problem that we are doing the genuine business, someone is investing into our company, and the tax department wants to collect the tax even before we have started our own business. So that started creating the problem because those angel investors, they stopped investing into the new startup. So everyone please mute your phone because I can hear some of you which is creating a distraction in the class. So basically it created the problem in the genuine cases. And the startup community, they went to the Prime Minister, they met with the Finance Minister, and they raised this issue. So finally, in budget 2019, that is last year, some relaxation were given for the genuine cases, right? So this term was a lot of time in news in the last year. That is why this becomes important, right? So let us see from our study material about this angel tax, and then after that if you have any doubt you can ask me. So please read this yourself and after that we will discuss. So basically angel tax is applicable on the capital raised by unlisted companies. Unlisted company क्या होता है? Those companies which are not listed on the stock exchange. It means those companies who have not yet made any public issue, right? So they are going for the private placement. They are selling their shares to some individuals, right? They are not selling their shares to the public. So that is why this is applicable in case of unlisted company, not in case of listed company, right? From any individual against an issue of shares in excess of fair market value. The tax has been classified as income from other sources, right? So income from other sources is a category of income inside the Income Tax Act, है ना? तो Income Tax Act में there are various type of income. For example, salary income, business income, capital gain, which we discussed in the taxation chapter. Similarly, there is income from other source. So this kind of income, that is rupees 80,000, which I gave in my example, those 80,000 are basically classified as income from other source and a tax is levied on that income. So this tax was introduced in 2012 as an anti-abuse provision, as the government sought to stop the practice of issuing the shares in unlisted companies at high premium, है ना? So basically in some cases actually the black money was being converted into the white money. So the unlisted companies, the new companies, they were issuing the shares to some individuals at a very high cost. So those individuals were able to convert their black money into the white money. So actually that happened. Then only government came up with this angel tax. But some genuine cases were also caught up in this provision, right? So simply put, angel tax is 30.9% tax levied on investment made by investor in the startup or companies. To clarify, the entire investment is not taxed, right? So in our example, we took the example of 1 lakh rupees. So entire 1 lakh rupees is not taxed. Only the amount that is considered above the fair value valuations of the startup is taxed. That is amount above 20,000. That is amount of 80,000 is taxed. Currently the angel tax is applicable to the individual investors, right? So this is applicable only in case of individual investor, है ना? Because the chances of black money are more in individual investor. If it is a proper fund, if it is a proper venture capital fund which is a registered NBFC, then that fund must be maintaining some accounts, that fund must be complying some regulations. So the chances of any black money there are very, very less. So this angel tax is applicable only and only in case of individual investor. This is not applicable in case of venture capital fund, and this is also not applicable in case of non-resident, because we want to increase the foreign investment. We want to encourage FDI and FII. So this provision is not applicable in case of foreign investment. While the clause did not apply to startup receiving funds from registered venture capital investor, है ना? And AIF1 category. What is AIF1 category? AIF1 category is basically alternative investment fund category 1. So those alternative investment fund which are really contributing to the economy. So we will discuss about it. What is the meaning of alternative investment fund? We will discuss about it in this session only. Angel investors are not recognized as the venture capital fund. So we have already discussed the difference between the two, the difference between the angel investors and the venture capital funds. ठीक है? Now budget 2019 announcement, which I told that this angel tax now it has been relaxed to resolve the so-called angel tax issue. Startups and their investors who file requisite declaration and provide information in their return will not be subjected to any kind of scrutiny in respect of valuation of share premium, है ना? तो मैंने आपको बताया था कि मेजर प्रॉब्लम जो है, the controversy is about this fair market value, that how to calculate this fair market value. The major controversy is about this, है ना? So if the startup and the investor, they are providing complete information and they are declaring clearly in their income tax return that okay, I received 1 lakh rupees and this was received from Mr. X, and Mr. X is also telling that I brought this money from this area. So there is complete information. That means like this is a genuine case. So in case of genuine case, there will be no angel tax scrutiny. मतलब income tax department will not ask you कि भाई पैसा कहाँ से आया, कहाँ पे लेके जा रहे हो, है ना? The issue of establishing the identity of the investor and source of this fund will be resolved by putting in place a mechanism of e-verification, है ना? So basically income tax department will put up some e-verification mechanism through which the identity of the investor कि मिस्टर एक्स कौन है, इसकी सोर्स ऑफ फंड क्या है, क्या वो ब्लैक मनी है या व्हाइट मनी है, is it tax paid or is it not tax paid, we can actually like income tax department will actually put a e-verification mechanism. The benefit was also extended to category 2 AIF, है ना. तो पहले it was only for category 1 AIF, now it has been extended to category 1 AIF also. Therefore, the valuation of shares issued to these funds shall be beyond the scope of income tax scrutiny. So income tax department will not conduct any scrutiny, they will not levy any kind of annual tax in case of category 2 AIF also, है ना. Falling. So RBI has been decreasing the repo rate for a long period of time, but still why the interest rates are not decreasing for the people like you and me? So what are the what is the reason? So apart from these reasons which we have just discussed, one of the important reason is this rigidity in the saving deposit interest rate, right? So one thing that I already told you, that 80% of them are the term deposit, right? And now next is lending rate. Why lending rate is not changed? So what is lending rate? Lending rate means the rate of interest at which bank gives loan to its customers. So why the lending rate is not changed? So the lending rate is not changed because bank borrows very less, just 0.25% of their deposit from the RBI at the repo rate. So as I told you, bank have multiple sources of getting the money. So even if RBI reduces the repo rate, bank's cost of funds, the rate at which it offers to the depositors, does not come down, and hence it is not willing to reduce the lending rate, right? Some funds which the banks borrow from money market and the capital market as that may come down slightly due to reduction in the repo rate, but the volume of money raised from these markets is also less than 20%, hence it does not impact much the lending rate of bank, right? So can you see that even if RBI reduces the repo rate, still the bank cost of fund is not going to come down because the source of money from where the bank is getting the money are multiple, and the source which belongs to RBI is very, very minuscule. Impact of external benchmark rate based lending rates, right? So since October 1, 2019 in India, we have adopted this external benchmark rate based lending rate for selected sectors, right? So for the sectors like retail and the MSME loan, the banks are under compulsion to link it with the repo rate, right? So for example, we talk about the home loan. So home loan is part of the retail loan only. So home loan will be given, for example, at the repo rate plus 3%. For example, repo rate is 5.15%. So 3% will be added by the bank as the extra charges, which is also called as the spread, and the customer can get the home loan at the 8.15%. So the lending rate have been directly linked with the repo rate. So the 3% is the spread. This 3% is the spread, which will include the bank's profit margin, costs, credit risk, like the risk of non-recovery of the loan, and for operational cost also, right? Now this 3% is very, very high. This 3% is very, very high. So effectively, even the previous reductions have not been transmitted because of this high 3%, right? So the banks can revise the spread also, and in that case again lending rate may not come down. So even this spread is not fixed at 3%. Even the bank can increase the spread, and when the bank increase the spread, then the lending rate will not come down. So the point I want to make is that even the external benchmark rate based lending rate will not make much difference because it has the element of spread. It has the element of spread which the banks can change, and this spread is very, very high. So what will be the best mechanism? The best mechanism is to link the deposit and lending both with the repo rate, right? In that case, when RBI will change the repo rate, the bank deposit rate, that is the cost of fund, will also come down, and the lending rate, that is the income, will also come down. Now, what are the other efforts done by the RBI? Other efforts include insolvency and bankruptcy code. So it will revive the banking sector by resolving the problem of NPA crisis. So when banks' balance sheet are good, they can give more loan. The transmission can happen easily. NBFC regulations, even the NBFC is under the government supervision. Prompt corrective action framework. So for those banks who are having the high level of NPA, this PCA framework is working so that they do not, their health do not deteriorate further. Asset resolution, so resolution of the NPA, and bank recapitalization, giving more capital to the banks, bank recapitalization. So because through all these measures, the government is trying to strengthen the monetary transmission in India. Now there are more suggestions, what more can be done. So these suggestions I have taken from multiple articles, and this has actually become a kind of mains question. So there is a possibility that in the mains examination they can ask this question, that why the monetary transmission is not happening, what are the efforts of the RBI, and what are the different suggestions which you want to give. So what are the suggestions? First suggestion is the surplus liquidity, right? So we should have the surplus liquidity. When the liquidity is surplus, the banks are ready to give the loan, and when they give the loan, they can have the impact of the repo rate. Then lending rate should be market driven, which we have already done for some of the loans. Stable financial system, and in the last, linking the deposit and the lending both with the repo rate, as we just discussed in the previous session. How does the monetary policy affect the different sectors of economy? First, lending rates. Lending rates are directly impacted, right? So if repo rate is increased, the lending rate is also increased, and the impact of lending rate increase is that the business investment comes down. Exchange rate is also impacted, because if we have the expansionary, if we have the extra money supply, if the money supply is high, that means the rupee supply is high, that means the rupee's value will come down, right? So rupee value will come down. Effect on the employment. So if there is high deflation, then we will try to use the expansionary monetary policy, and when the expansionary monetary policy is used, then unemployment can be reduced. GDP growth rate, that is also impacted, because change in the money supply actually changes the investment decision, and change in the investment decision impacts the GDP, and GDP changes actually impact the growth rate. So you can see direct linkage between the different things. Now, limitations of the monetary policy, most of them we have already seen, that first, there is a time lag, right? Time lag in the implementation and the working. So because of the time lag, if the time lag is so long, the policy may become ineffective. So if the prices are too high today and we reduce the repo rate today, then it will take maybe 3-4 months. So in this 3-4 months, there will be nothing. There will be no impact upon the consumer. So it will have an adverse impact. Problem in forecasting. So even the effect of monetary actions, they may not be forecasted. The data is not easy. The collection of data is not easy in India. We already have so much issues going around the data. NBFC. So there are huge operations which are done by the institutions other than the bank. So their operations also impact the monetary policy. Underdevelopment of the money and the capital market. So money and the capital market are fragmented, they are unorganized, and they work independently. So we have a lot of unorganized banking structures, informal lending structures. So because of that, the monetary policy will not impact everyone. Only that person who gets the loan from the bank will be impacted, and those people who get the loan from the lender, they will not be impacted. What are the other limitations of the monetary policy? So in case of deflation, when there is low money supply, RBI will increase the money supply. How it will increase? By reducing the repo rate. But in any case, this repo rate can not be below zero. It cannot be less than zero. So there can be a situation where even if the repo rate is zero, still this deflation condition is not going away. So here the monetary policy becomes ineffective. Next is stagflation. Stagflation is a combination of two words: stagnation plus inflation, right? So stagnation means there is no demand, still the prices are high. So this is a very contradictory situation. Normally the prices are high only if the demand is high, but here there is no demand, still the prices are high, right? So in this case we have the inflation, and for countering the inflation, the RBI will reduce the money supply, right? But reduction in the money supply will be having no impact upon the demand. The demand will not be impacted. Why? Because the demand, already there is no demand. So even if the money supply is reduced, still there is no impact upon the demand. Demand cannot be negative, right? So there will be no impact upon the demand. So in this case, even the monetary policy fails. Even in this case, the monetary policy fails. So in this case, what is the solution? The solution is basically to work upon the supply side measures. That is doing more investment, right? So that more and more production can take place and this price can come down, right? So that more production can take place and this price can come down. And apart from this, there can be other solution also. For example, controlling the exchange rate, because at times the high exchange rate, the negative exchange rate also impacts. So there can be a situation where because of the high crude oil prices import, the prices are rising, right? So there is no demand, but still the prices are rising because the cost of import is very, very high. So we can take the effort to resolve that also, right? So in this case, in case of stagflation, the monetary policy fails, right? And at present, we are moving towards the stagflation. The economists are discussing whether we are in the stagflation or we are moving towards the stagflation. So this becomes very, very crucial for your examination also. Now, next is liquidity trap. So monetary policy is also not effective when there is a liquidity trap. Before I discuss this term of liquidity trap, let me tell you that relationship between interest rate and bond prices, right? So this relationship between the interest rate and the bond prices is inverse. Relationship between the interest rate and the bond prices is inverse. That means if the interest rate increase, the bond prices will come down. If the interest rate decrease, the bond prices will go up. This is the one thing that you need to understand. Now, what is liquidity trap? So there is a situation when there are high savings with the customers or with the citizens. So the level of savings are very, very high. That means they are having the balances in their bank account, right? In the bank, they are having the balances in their bank account, and in the market there are a lot of bonds available for the sale. So these bonds are basically investment opportunities. Now, suppose Mr. A is having money in the saving account. So Mr. A is not buying the bond. Why Mr. A is not buying the bond? Because Mr. A is expecting that at present the interest rate are low, right? So this is also one of the condition. So there are low interest rate and high saving. These are the two conditions, right? So this low interest rate is also the condition, right? So there are high savings and low interest rate. So Mr. A is saying that because the interest rate is already very low, in the future the interest rate is going to increase. And when the interest rate increases, the prices of bond will come down, right? So assuming that buying the bond will not be beneficial, because in the future the interest rate will increase, and as the interest rate increase, the prices of bond will come down. If the prices of bond come down, then he or she will lose in the investment. Are you getting the point? So because of this psychological issue, they are not buying the bonds. So even if there is huge balances in the saving account, interest rate are low, there are investment opportunities, still people are not ready to invest into the economy, and the liquidity gets trapped into the bank accounts. Are you getting the point? The liquidity gets trapped into the bank account. That is why this is called liquidity trap. This is very, very important, because this concept has been given in the NCERT, and till date this concept has not been asked in the examination. There are high chances that examiner will ask this question, right? So a liquidity trap is a situation in which interest rates are low and saving rates are high, rendering the monetary policy ineffective. In liquidity trap, consumers choose to avoid the bonds and keep their funds in savings because of the prevailing belief. So this is a belief that interest rate will soon rise. Because bond price have an inverse relationship, so consumers may not want to hold the asset with a price that is expected to decline. So a liquidity trap is when monetary policy becomes ineffective. It is a function of economic conditions and also psychological. And it is not limited to bonds only. It can impact the demand of the products also. What is the solution? The solution is increase the interest rate. Definitely it has to be increased. And when the prices fall further, when the prices of the bond fall further, there will be a point where the investor or the Mr. A will like to buy it, right? And also increase the government spending. So in the liquidity trap, there is a absolute liquidity preference, and low rate of interest, people will hold money as the inactive balance. However, demand of money does not depend so much upon the current rate of interest. So the current low rate of interest is not actually impacting the demand, but the expectation of the psychology is impacting the demand. In 2013, there was a question, supply of money remaining the same when there is an increase in the demand of money, right? So supply is same and demand is increasing. That means there will be increase in the rate of interest. This is the solution. With this, I complete this session. Thank you very much. God bless.